Good morning and welcome to Stock Market Today. It's Wednesday, January 23rd, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Follow me on Twitter at DanRusso_CMT. If you're over on StockTwits, I'm there as well under the same handle. That's at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to ChaikinAnalytics.com/today, you can sign up for a free email to follow along with this show. It gets daily stock ideas to consider. Hits your inbox every day that the market is open prior to that market open. So U.S. equities were lower in Tuesday's trading, reversing some of last week's gains. Russell 2000 and the Nasdaq underperformed at the index level. At the sector level, energy and industrials were the worst performers. Utility and REITs led, with the utilities being the only sector to finish higher on the day. Healthcare and financials were also relative outperformers. Treasuries were stronger across the curve. Dollar was weaker against the yen, but slightly stronger against the euro. Gold finished up 10 basis points, and WTI crude settled down nearly 2%, though off the worst levels of the day. So your outperformers, utilities, REITs, and healthcare. Your underperformers, energy, industrials, and telecom. As we get to the desk this morning, futures are up 30 basis points after coming under pressure on Tuesday to break a 4-day winning streak. Asian markets were mixed overnight. European markets are slightly higher. Treasuries are weaker across the curve after yesterday's gains. The dollar is firmer versus the yen, but flat on the euro cross. Gold is slightly higher, and WTI crude is up nearly 1%. So it's interesting to me here at the index level for the S&P 500 that we pushed through the 50% retracement level and then came back down below it. So we'll call it a stall out near the 50% retracement level. That's a retracement of this entire leg lower from the September highs to the December 24th lows. We've now retraced 50% of that move and appear to be stalling out. Support is near 26.25 and then around 2600. Resistance comes into play in the 2700 to 2735 zone. RSI, while improving, does continue in bearish ranges. We've been talking about that for a while. Where is the momentum thrust to go along with this move higher in price? Just not seeing it at the moment, but Chaikin money flow remains bullish. So some mixed signals on the indicator front as the market stalls out near the 50% retracement level. Now we are up 30 basis points here this morning, so we'll take a look to see how the day plays out, as well as how the market plays out through the remainder of earnings season. Now, your market in a minute. Here's what I'm talking about in my note to Chaikin Analytics clients today. Stocks closed lower as overbought conditions remain in place. That's based on our proprietary overbought, oversold indicator. Small caps and the Nasdaq underperform on the day. We'll take a look at a chart of the Qs because I think that one's pretty interesting. Semiconductors continue to lag the broader market. You know why I think that's important? We want to see semis outperform to give us an indication that the market is likely to follow suit. Semis relative performance tends to be a leading indicator for the market in general. Sentiment indicators ease further from extreme fear, and futures do, as I said, point to a higher open here today. So now the power bar saw a little bit of deterioration yesterday at the major index level. The Dow down 1.25%, 1 bullish or very bullish stocks, 4 bearish or very bearish stocks. S&P 500 down a similar amount, 71 bulls to 123 bears. Now, the Nasdaq and the small caps for your underperformers. Nasdaq down nearly 1.9%. 15 bullish or very bullish stocks, 26 bearish or very bearish stocks. Remember that index creeped to the positive side on Friday. Now we're back to a bearish tilt to the ratio. Small caps, 274 bulls, 437 bears. Bonds upticked on the day. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bearish. Major indexes mixed with a bearish tilt is how I would describe them. Now, your stock of the day today, an idea for you to consider, although I don't like it in the here and now, is Hillrom Holdings. HRC is the ticker symbol there. Closed at 96.72, down 1.5% yesterday. Comes to us from the medical products group, which has been weak, and we'll talk about that in a second. Now, stock has a very bullish rating due to very strong earnings performance, attractive financial metrics, and strong price volume activity. And when we take the 20 factors that make up these 4 main categories, we come out with that very bullish rating. So let's analyze the stock here. Very bullish stock, strong trend, but a weak industry group. Healthcare products really went from a leader to a laggard at the tail end of last year. So it's something to consider when we're looking at long ideas. But Hillrom has really shown some outperformance as the market faltered and continues to outperform as the market rallies back. Now, here's our very bullish rating. Ribbon at the bottom of the screen tells us where the power gauge rating is and has been for the past 12 months, and we're currently on that very bullish rating. Stock's been outperforming the market since early November, and the intensity of outperformance is actually increasing here to start the year as the market's gotten off to a strong start. Type of name we want to consider. This is what I talk about when I talk about looking for names that have shown strong relative strength as the market has been volatile. This certainly fits the bill. But in the near term, it's very overbought, similar to the market in general. Chaikin money flow is bullish. Stock is above a rising now long-term trend line, but you can see we have plenty of resistance here in this, call it $97, $98 area, even up to the upper 90s. What I think you want to see happen here is a consolidation in the stock just below this resistance level. Work off this overbought condition, and then it becomes a more compelling candidate. I think as long as the stock kind of goes sideways here and holds above the rising long-term trend line, it's a name that you want to consider when the market reaches an oversold level and holds key support, and when the stock becomes closer to oversold. Right now, we're still very overbought, so I want to give that some time to play out. But HRC is going on to a bullish watch list today. Now, our sector tracker, looking at the movement of the major sectors of the last 5 days, financials continue to be at the top of the list as investors respond positively to the earnings reports from the banks thus far. Materials, industrials, and healthcare round out the top four. Interesting to see that the defensive names like real estate and utilities have now crept up to the middle of the pack. Remember, they had been seen some profit taking to start the year. I thought that move might be counter trend in nature. I still continue to feel that way. Bottom of the list, communications, only group that's down over the past 5 days. Staples, discretionary, and tech round out the bottom four. And it's interesting to me that tech, while it's rallied with the broader market, really hasn't been able to outperform. And we really, if you're bullish, you want to see tech outperforming because it's roughly 20% of the index. Now, our industry in focus today is capital market services, which over the past 6 months has underperformed the S&P 500 by a little over 6%. Its power bar ratio, which measures future potential, is neutral. 11 bullish and very bullish stocks, 11 bearish and very bearish stocks. The group is currently ranked number 7 of 21 subsectors. It has moved down 2 slots over the past week. So, really, when you're looking at these neutral groups that have been underperforming, you want to focus on the names that you want to avoid, or potentially look at opening positions to the bearish side. But really, Franklin Resources, ticker symbol BEN, Moody's Corp, ticker symbol MCO, and WisdomTree, ticker symbol WETF, all have very bearish Chaikin power gauge ratings. So we know that those are the types of names that we don't want to own. Even if we want to focus on the group because it is neutral, you really want to focus on these bullish and very bullish stocks and avoid these underperformers. And here's what I mean. Here's WisdomTree. Stock is very bearish, closed at 674, down 1.6% yesterday. Weak trend, strong industry group because it's part of investment bankers. But really, just don't want to go bottom fishing here. This is an angry looking chart when we look at the lower half of the chart here, right? Power gauge rating has been on that very bearish rating for quite some time. Stock's been underperforming the market since late May, early June, with the intensity of that underperformance really picking up. Stock is currently overbought. Chaikin money flow has been persistently bearish since the June-July timeframe. Couple of bouts of bullishness, but for the most part, really Chaikin money flow from a persistence standpoint can only be described as bearish. Stock is closer to overbought, actually slightly overbought now, but it does remain below a steadily declining long-term trend line. If you're thinking about going bottom fishing in a name like this, Mark Chaikin likes to say bottom fishing is the most expensive sport in America, and there's reason for that. Don't go bottom fishing in these names. Wait for them to stabilize. Wait for signs to be there. Look for outperformance. Look for the power gauge rating to turn bullish. Wait for money flow to be more persistently bullish. Then you can start to look at some of these names that might be changing trend from down to flat and then eventually move higher. But for now, we continue to want to avoid names like this. I will point out that they are scheduled to report earnings next Friday, February 1st. So that could potentially be a catalyst that gets the stock moving. Looking at our trending names now, yesterday's S&P 500 gainers and losers. PCG, some commentary on debtor in possession financing sends that stock higher for a second day in a row. Couple of activists involved in eBay. That was enough to get that stock going to the tune of a little over 6%. CBOE, no real news there. Stock up 2.25%. Fifth Third's earnings. Again, part of that financials complex. The banks, investors reacting positively to their earnings announcements. CME talking about moving some of their venues in response to Brexit. That's the only real news that I saw on the day. Stock was up 1.5%, a nice outperformer. So Arconic on the loser side down 16% as it looks like a deal to sell the company to a private equity firm has fallen through. So some of the deal premium that was in that stock starts to come out. Stanley Black & Decker's guidance, SWK, disappoints the street. Very bearishly rated stock, down 15.5% yesterday. Altria, ticker MO, catches a downgrade. Some other negative news sends that stock down nearly 7%. Didn't see much in TripAdvisor, TRIP. Bearish stock, part of those online travel agencies that just haven't looked good, down over 6%. Micron, some commentary about memory pricing, sends that stock lower to the tune of about 5.25%. So let's move on now to the earnings update. Capital One missed by 54 cents. That stock pretty volatile in the pre-market. TD Ameritrade beats by 11 cents. Halliburton beat by 4 cents last night, or yesterday rather. That stock did trade lower. Travelers beats by 15 cents. Interactive Brokers IBKR missed by 2 cents. Before the bell today, we're going to hear from bullish-rated KMB and bullish-rated VAR. Varian reports after the close. Some of the neutrally rated stocks that are going to be on people's radar screens before the open: Comcast and Northern Trust. After the close, we'll hear what Citrix has to say, Ray J, F5, as well as Xilinx. Those are neutrally rated stocks. Bearish stocks before the open: Abbott, Amphenol, and Rollins. Amphenol is trading lower. And then after the close, bearish rated Texas Instruments. All eyes will be on that group here to get a gauge on tech and the semiconductor industry group within the technology sector. So as I said, Nasdaq underperformed on the day yesterday, and I wanted to take a look at this chart because it does look interesting to me. It does look very similar to the market in general, but notice how it didn't push as strongly through the 50-day 50% retracement of this leg lower, and then turn lower from there. It is below the 200-day moving average. Now, if we were to push through, I would expect resistance to really come into play around 170. We've been earmarking 165. We did fade from there, but if we do push through, watch that 170 level. It's the 61.8% retracement, and it's roughly in line with where the 200-day moving average is. RSI remains in bearish ranges, but Chaikin money flow is bullish. So similar mixed signal there to what we're seeing in the broader market, that being the S&P 500. Now, overbought semiconductors continue to lag. As I said, we're going to hear from Xilinx later. We're going to hear from Texas Instruments later. But this is the SMH, and you can see it's been underperforming the market since the summer. Overbought. Money flow has been persistently bearish since October, rounding down from that overbought condition. Semis remain below the long-term trend line. This is a key group for me. I want to see this turn positive. I want to see semis begin to outperform the market to give me confidence that the market is putting in a durable base and is likely going to begin to move higher. It was a key tell at the top as semis topped out before the market, and it could be a key tell here for whether or not we're putting in a durable bottom. So far, not outperforming, but we do watch this one closely. Finally, sentiment continues to ease from extreme fear. Here's that 13-period moving average of the CBOE put-call ratio. It got up to about 1.29 on December 24th. We're back at 1, still elevated, but easing. So some of that extreme negative sentiment that was a tailwind for the market from the December 24th lows is actually coming off as the market trades into resistance. Something to keep in mind if you're thinking about chasing this rally here. So that's it. Sign up for Daily Stock Ideas, ChaikinAnalytics.com/today. I will see you here tomorrow.